It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, July 19th, 2016. Markets were a bit choppy today with some narrow ranges that surely reinforce the importance of buying low, selling high, and following our basic trading rules. But that's not slowing us down from finding some excellent opportunities in tomorrow's session. Crude oil and euro are bearish, while the S&P and gold are both range-bound this evening. I have another great newsletter for you tonight. Plenty of reliable opportunities setting up for tomorrow. Before we jump into our charts and put together this strategy for a Wednesday session, I want to remind you the only place to find the full-length version of this newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Come out and join me here on the blog at Sideways Markets, where, of course, you can watch the full-length version. Also, while you're here, if you're not a member at School of Trade, I get a free pass for you to come out and join me as a guest in the trade room this week. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, don't forget to join the mailing list. All I need is your name, your email address, and then hit the submit button and check your inbox. I'm going to send you an email every evening when our nightly newsletter is ready to be watched. Very, very easy. Promise no junk mail in that inbox. Nothing but the good stuff here for our nightly newsletter. Below the video tonight, you'll see a spot to download today's charts. All the charts you see me using in tonight's video, you can download those charts by following that link below the video on our blog. And of course, as I always remind you, you're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. Join the free trial on the right-hand side of the blog. And if you have any questions along the way, I'm always standing by 24/7, 365 to answer all your questions. No question too big or too small. Hit me up on the live support button on the right-hand side of the blog. It's also on our website as well. Hope you guys are having a great week with us here so far. A little bit slopped up here today, right? Summertime markets are definitely feeling their effects right now. But as I always tell my students in the trade room, when times like this happen, right, this is when you really got to rest on those trading rules, because if you're chasing after moves, buying high, selling low, if you're not managing your emotions properly, it's really easy to get in trouble in today's market. So make sure you guys have a plan. Make sure you follow that plan. We'll, of course, do it all together with our students tomorrow, once again here at 8 a.m. Eastern Time in our trade room. Let's take a look at the calendar for tonight, for tomorrow, and then, of course, we'll take a glance into the future here and see what we got here for the charts for tomorrow. Tomorrow's Wednesday, July the 20th. We have no major news from our friends in Asia, Australia. Nothing on the horizon there tonight, so nothing to worry about there in the Asian and Australian session. Tomorrow, though, we've got some market movers here. The labor report at 4:30 a.m. from our good friends in Great Britain. Boy, that news this morning coming from our friends in Great Britain, that really got the markets moving this morning, didn't it? So I would assume that everything coming out of the UK right now is most likely going to be responded to here, of course, post-Brexit from a few weeks ago. So heads up tomorrow if you're on the London session, right? We'll, of course, be in our chat room tomorrow morning. Our trade room opens up at 8 o'clock Eastern Time. Our chat room, though, is really moving in the early part of the day, though, in that Asia into London, into U.S., and then, of course, afternoon U.S. session in the chat room. If you're trading in London tomorrow morning, though, 4:30 a.m., the labor market report, and then, of course, we have the petroleum status report tomorrow at 10:30 a.m. for all you crude traders out there. Regarding that crude inventory report, don't forget 15 minutes before, 10 to 15 minutes afterwards. We always have that strict cutoff at 10:15 ahead of news. And remember, guys, don't make that rookie mistake of trying to trade the news. Right? First of all, the actual news itself has nothing to do with the overall reaction to the market, right? News is basically noise. So we wait for the news to come and go, and then we trade the reaction to it, waiting for most news events 5 minutes before and then a few minutes afterwards. But for tomorrow's inventory report at 10:30 a.m. Eastern Time, if you are trading crude or the S&P 500, it's been a shadow of the oil markets this year. And so don't forget, those two markets will be reacting tomorrow morning. My cutoff in the trade room will be 10:15. And then we'll pick it up after 10:40, 10:45. The tough part is we never really know how much of a volatile reaction we're going to get. We have to wait for that volatility to calm down. Usually it takes about 10 minutes, but sometimes it really doesn't calm down for a good 15 minutes afterwards. So be careful tomorrow with the petroleum status report. like I always say, there's plenty of times during the week to be making our money. We don't need to do it right ahead of or right on the back of that news. Liquidity is a big concern, and it's easy to get a blown account or two, right? Many of us don't even learn that lesson the first time. We go back and try it again a second time. So careful tomorrow, right? That's the bottom line. Careful tomorrow. And don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time, and we'll do it all with you. Alrighty, let's go to crude, go S&P, and then gold. And of course, we can't forget about the euro. Crude oil is bearish, trading lower with a spike in channel this evening. The day began with a strong spike higher this morning, which immediately reversed lower. Does not happen like that very often, by the way, and then turned into a bearish spike in channel, which completed the measured move target just as the afternoon news came out, the API number came out. They complete that measured move target, and basically this bear spike in channel that achieved the measured move, that's a key component. We have achieved the market objective. That tells the sellers not to look for continued bearishness as the most reliable trade, but to look for traps up above prior swings as the most reliable opportunity. The key is we've already got that objective, right? That measured move. And so we know once we get the objective, we look for that two-legged correction up off the measured move, followed by sellers re-entering the market above the prior swings overhead. Sellers clearly have control, but selling into the measured move, selling into the low just isn't a very reliable trading opportunity. So we assume the bears will be waiting for moves back to previous resistance levels overhead so they can sell high with a target back down at the lows. And also that $45 a barrel big round number just perfectly lining up with that double down target for the bears. If this thing happens to be able to break through that measured move, right, we get that double down target waiting for them at 45.02. How about the buyers? The buyers need to be patient right now and wait for a successful breakout pullback above the channel high with a target up at the correction zone at 46. You know, it's very easy, like I said, it's very easy to see the bears are well in control of this market. In fact, if anything, that spike higher that started the day off today, right, that spike higher did nothing more than give the long-term bears a chance to scale into this move and just get a beautiful opportunity, right, to sell this price right back down. The most important thing is this spike in channel. And whenever we see a spike in channel on the chart, we know follow the direction of the spike and then look for traps. Traps are going to occur above all the prior swings, 65, 87, and then of course the correction zone. Now remember, as we go higher here, let's play that game, what if price goes higher, what if price goes lower? As we go higher here, the sellers are looking for buyer failure, traps and failures up above the prior swings. Buyer failure, traps above the prior swings. Now, as we go higher, the correction zone really is pretty much the last line of defense for the bears. If they get above that 46.02, then the buyers have a chance to hold a pullback and make a run back to the high of day. We'll have to wait and see how that plays out tomorrow. So as this price goes higher, sellers, you're looking for buyer failures. And again, keep an eye on these prior swings because that's typically going to be where you're going to get the move lower. Now, what if you're a buyer in this situation? If you're a buyer, careful, you're going against the trend here right now. But really the most reliable trade is going to come. We'll get a few of these here tonight where we get a breakout, pull back, and you'll notice I'm drawing out kind of this moving average, if you will, right? And so look to combine the top of that channel along with that moving average. That's really going to be where you get the most reliable buying opportunity. Just be aware, though, again, if it does fail, sellers will be looking to attack to send that price right back down to those lows again. So buyers, you really want to get a new higher high, hold the pullback above the moving average, and then that will be your clue that at least in the short term, right? It's not going to be forever because, again, you're going to have more sellers likely scaling into this market. As it goes higher here, we have to assume there are major players in the market that are going to be looking for opportunities to sell here, to sell here, to sell here, right? And of course, just load into a big position for the move back down to those lows. As we go lower, this is a tough spot to be a seller. If we've learned anything from the choppy session we had today, you don't need me to repeat it, right? Don't sell the low, right? We don't make very successful trades over a long period of time, right? The reliability is very low if we try to sell low. So as this price goes lower, yeah, the buyers can look for seller failure and be a buyer here, but that's a real aggressive trade because it's a bear market at that point. What you really want to do is if we see a breakdown, make sure that breakdown really closes strong. Then what you can do is look for what I call the okie doke or the breakout pullback. And that what that means is that rather than just simply trying to sell the breakout pullback, which is it's about a 50-50 trade, right? It could easily fail and go back in. Again, it's not reliable enough on its own. What I like to do is I like to play that game against the buyers. I like to wait for the breakout pullback. Then we typically will see the buyers attack, right? The buyers will attack and they'll try to run this thing back in, thinking they're going to buy low and the price just, quote unquote, can't go any lower, right? We've all played that game before. Most of us do it incorrectly, right? I know I made that mistake when I was a new trader. So what I'm going to expect the buyers try to buy that little pullback, and that's where we identify where their stops are, and that's where we're going to be looking for the most reliable opportunity, right? Selling below. And again, I kind of call it the okie doke because the buyers are going to try to play that failure against you. Sit tight, wait for the buyers to take that bait, and then look for, as we call it, the second sell off the high on the way down to that double down target, right, sitting there below at 45 even. As of right now, we don't have a lot more to work with. Looking for that price to push above those highs, trap high, and back down, as we assume sellers will be scaling in. If it does go lower, just be careful not to sell the low. Buyers, beware. Buying the low is still not a reliable trade until this market becomes a bull market. And of course, sellers, be careful not to get trapped with that breakout pullback. How about some S&P? S&P is bullish on the way back to the highs of a trading range this evening. Just as we expected, the bulls keep buying the low of this multi-day trading range with the goal of going back to the range high and up to new all-time highs tomorrow, maybe later this week. We talked about this last night on the newsletter. We have this bull range, the same range from last night, right? Get this bull range in the chart. And we know we've got those prior all-time highs up there at 2168, 2167 and some change. And so we know that buyers are probably interested in going back to the all-time high, but they're not going to want to buy the all-time high. And so right now they're buying those D pullbacks, right? And of course, we expected to see buyers entering the market at the low of this range. But boy, oh boy, I didn't expect to see such a great example of that today. So again, this is an example where if you bought high, right, if you're going to try to keep buying high right now, you're going to keep taking a lot of heat on those trades. Gold was another example of that today, where if you tried to keep selling the breakouts, buying the breakouts, you got nowhere today except a deep drawdown on your account. So S&P is bullish on the way back up to those range highs. With the strength of this recent bull move, look at this most recent bullish move here as we finished up the session today. I'll zoom in a little bit closer here. As we finish the session, that's a pretty strong bull move. With that strength, we do expect buyers to be interested on the next pullback. However, we can also see there are resistance levels in the way. So the bulls need to get a breakout pullback above the resistance, or they need to look for a pullback before they buy, right? Pullback back to that area of support at the low of the channel, or of course at that moving average. Now, sellers need to be patient and wait to see if the next pullback fails. Then look for a target back to range lows, or they need to look for buyer failure at the range high with the goal of selling the high, which is assumed to be very low reliability because, after all, this is a bull bias going into this trading range. Again, if you didn't watch last night's newsletter, we talked about this last night, and this is definitely a good example of why it's important to get with me at least for your favorite market each evening, right? You don't need to watch the whole video, but definitely keep up with each market, right? Because we'll be combining multiple days and talking more about how things develop. So it's a good idea to get to be at least consistent, at least at the very least, a few minutes each day with me on this newsletter. With that said, we've got the trading range. We talked about this last night. We're expecting rotation up to the high of that trading range, right? Right now we have a bull bias going into a trading range.